Note, we're talking today about investors, about ideal investors, investors that are a fit, investors that are not a fit. What we look for in investors, what investors look for within us, and kind of give a little bit of transparency into our business model, how we deal with investors, onboarding process with investors, but mostly to explain to you which investors are a good fit to work with the Goldfinger group, and Max will do the talking.
Perfect, just the way I like it. So. Yeah, I think the biggest piece is, if you're an investor, is understanding who you are as an investor. There's so many avenues and paths that you can go down. And specifically with real estate, the way I look at it, there's kind of two ways to invest. You can build equity or you can cash flow. I mean, you can do a combination of both, but that's usually the target, right? There's some people that say, hey, I want a check every month or every 3 months. Or there's some people that say, hey, I want to put my money in the deal, I want to put $100,000 in, and in 10 years I want to look back and have $1 million from my $100,000 investment. So I think that's the key, is understanding who you are as an investor. Do you want cash flow? Do you want to build equity? Are you looking for 8% returns? Are you looking for 15, 20, 25?
30. I'll take
more.
40.
And then on top of that is, what areas do you want to be investing in? If it is real estate, right? Real estate may not be the fit for you. We hope it is, right? Because that's what we do. We're not stockbrokers, right? We invest in real estate. We buy real assets here in LA. So it's like, what asset types do you want? What locations? And I think ultimately, and what we're going to get into about the Goldfinger group is, I think the most important thing of who you are as an investor is, who do you want to be investing with? I think that's like number one, because anybody can come out here and tell you, hey, here's what I've done, this is what we're doing, this is the return I'm going to get you, but do you trust that person? Is that somebody you want to work with? Do you have aligned interests? And these are big things for us as an operator that we try to portray to our investor base and new investors is exactly who we are and how we operate and why we're a good fit to partner together on the properties that we're buying.
Right, and sometimes we're not the right operator, sometimes we're not the right fit, because you can meet someone who's looking to invest in office buildings in Houston, right? And we don't do that, right? We invest in apartment buildings in Los Angeles for now. We'll see where things take us in a year or 2 or 10. But at the moment, what we've done and what we continue to look for and continue to invest our own money in is a
make sure it's just going. Just keep talking.
Okay. No, we keep talking.
Yeah. No, we're good.
That's the first time I've heard you say keep talking. It's like, shut up, Elijah. Look at this computer screen. Stop talking. Okay, I'll keep talking. So we're sometimes not the right fit for investors because they're not looking to invest in apartments in Los Angeles. Other times we're not the right fit for investors because personality types. We recently closed on a purchase last week. There was an investor who wanted to put a significant amount of money into the deal, but after talking to him, there was just a few red flags. The questions kept getting more and more nuanced, and it kind of felt like he was looking for a reason not to invest with us.
I agree.
And so at that point in time, I kind of just, didn't really pull the plug, but just let him know that the door is kind of opens and closed both ways, and that if it wasn't a fit, that's completely fine. But really, with all due respect, we weren't looking to waste his time or ours. And so, investment strategy, the product type and location, the business plan. And then on the personal side, it's like, what is the temperament, the personality type, and what is the investor looking for within a relationship with an investment company? Are they just looking to call 4 times a day and see what the plumbing expenses have been over the last 2 hours, or are they someone who understands that the investment does have a 14-month business plan, and that yes, we do quarterly reports and we do have access to all the financials for our investors, but temperament and expectations are a big part of the equation when we're looking to see if an investor is the right fit to work with us.
Absolutely, and I think all these things fall into aligned interests. Some people are looking for a certain type of operator that their business is set up a certain way. They have a structure which not only just operationally but can be what's going to be my profit share split, what's going to be my preferred return, what's my net, how often do you distribute, right? So a lot of these things, we have I wouldn't say that we're unique in any way.
Definitely not. We're definitely not unique in any way. Don't get ahead of yourself.
But we have a system that is kind of tailored to what we're looking for and the people that we're looking to bring on. And I think a part of this is the Goldfinger group. Yes, we do have a formal structure where we send out quarterly reports. We have all our accounting set up so that when investors call, we're able to share that with them. But I think the big thing, and I think why a lot of people invest with us, is that we're not some corporation that you talk to somebody who's 4 organizations away from us. Like, we pick up the phone yesterday, right? We're dealing with something unique on one of our properties, and yesterday, or the past few days, we've been on the phone with all of our investors, right? We call them directly, let them know what's going on, let them know the strategy, the plan, the execution. So we have this informality where we're able to pick up the phone, send a text message, reach out directly to our investors, and have that relationship that's not just like so business, cut, dry system.
Yeah, I think a big part of that is because when you're investing with a huge company, which there's absolutely nothing wrong with that, but if someone chooses to invest in a large company, the founders of the company are generally not going to be available to every investor for every beck and call about what's going on here, what's going on there. And so you may have someone, a relationship manager or receptionist, someone who's a client representative that you're going to talk to. That person may see things on a spreadsheet. They may see the numbers, they may get some sort of progress report as to what's going on, but they're not going to know the nuances and the details of what's going on in the investment because they may not have money invested in the deal, and they may just kind of be there to answer the phones and give a routine message to the investors. So there's benefits and there's disadvantages in everything in life, and it's the same thing with investing, choosing an investment company to invest with. One of the benefits that we bring to the table is that we're there. We don't have lives. We don't sleep. We're really all consumed in this business because we enjoy it and can somewhat tolerate each other on some days of the week. Sundays.
Just Sundays.
So we're dedicated and we're there, and we're not this massive, $15, $20 billion company. And we thankfully have the resources to pay attention to our investors and understand their needs and have transparency and let them know what's actually going on with the properties beyond some sort of spreadsheet that is just confusing.
Yeah. So, what it comes down to is, we're talking a lot about who we are as a company, and I think also what we look for in an investor is somebody, what we have to cover is that you're an accredited investor, right? You fall into this category. We'll share the broad strokes.
Yeah, I was going to say, what's an accredited investor?
I'll quiz you.
Okay.
So, here in the U.S., I think it's $1 million of net worth. If you're single, making $200,000 a year. If you're married, it's $300,000 collectively.
It should be like on a dating app.
Maybe you'll make that next one.
Yeah, exactly. With a check,
Yeah.
credited. Okay.
That's first and foremost, so we'll get that out of the way.
Yeah.
And the big thing that you and I talk about a lot is, during the hours and hours that we talk every single day, is like, there's so many people, thank you, in LA and in the US and the world that have a lot of money and that want to invest in real estate, but not all of them are the right fit for us, right? So we're looking for somebody that fits into this accredited investor category, somebody that has a little bit of a nest egg and they want to grow that safely, securely through real estate, and also has the right temperament that's like at the same pace that we are. Like, we're very fast paced, but in terms of what we're doing, right? Like our energy, our attitude, our efforts, there's synchronicity between us and them in terms of how we behave, our attitude, and what we do on a day-to-day.
Right. I mean, if you're looking for an investment company where the managers are going to be wearing suits and ties every day, we're not going to be the right fit. If you're looking for an investment company that invests in apartment buildings in Los Angeles with guys who are dedicated to finding great deals, dedicated to executing the business plan, then yeah, we may be the right fit. We may not be for other reasons. You may not believe in some of the projections that we have laid out. You may not believe that apartments in Los Angeles are going to appreciate for whatever reason. So having the same investment thesis, believing in the models that we put together, and this is something that you touched on before, which is that you can look at an investment summary, a deck, and it shows that you're going to make 40% on your money, and it has all these assumptions baked in, because every business model, every projection is based on assumptions. And not looking at underlying assumptions is, I don't know the correct analogy for it, but it's like basically believing the tooth fairy, right? It's like, well, yeah, sure, this is going to happen.
The tooth fairy is not real?
Well, the tooth fairy is real, but there's many tooth fairies.
Okay.
Anyways, we'll get into it. I'll explain to you later after. Yeah. So I guess with the tooth fairy, it doesn't matter if it's real or not. You still get the money. So, let's not use the tooth fairy. But what I'm trying to say is that anyone can put together a deck, an investment prospectus, showing that you're going to make 50% on your money, and they're going to have all these assumptions as to how that's going to happen. The question is, those assumptions, how real are those? How likely are those assumptions to come to be? And that's something you got to look into is, are the people that I'm investing with, first of all, how much money are they putting in of their own funds? And generally for the Goldfinger Group, we're generally putting in between 15 to 20% of the total equity raised. So if we're raising $1 million, we're going to put in 150 to 200,000 of our own money. And so we have skin in the game. And then how realistic are the supporting evidence, the comps that we put in? So if we're saying, hey, we're going to get $4,000 a month for a one bedroom in Koreatown, then clearly like it's BS. Like no one's gonna get $4,000 a month for a one bedroom in Koreatown unless there's something like crazy miraculous with a rooftop, and like it's got to be the craziest thing in the world. But if they're saying, hey, we're going to get $2,800 for a 2-bedroom in Venice, okay, so that's really low, right? And then maybe you want to say, well, why is it so low? But the main thing is you're looking at the supporting evidence, the comps, and our prospectuses, prospecti. They have supporting comps for both the rents, for the sale value, for what we're buying the property relative to other comps in other properties in similar conditions. So looking at not just the underwriting, but what is underlying the underwriting, what is supporting the underwriting is crucial to an investor's due diligence when choosing a sponsor to work with.
Exactly. And I think what a lot of this comes down to is there's equal parts trust from both parties, right? And we like when investors are doing their due diligence, because it means that they care about investing with us and they want to invest with us. So they're going to take the time and energy to inspect what we're putting out there, do their due diligence. And so we're happy to answer these questions, talk about it, because when we're buying a property, we probably offer on, and I don't know if we want to put this out there, but like we probably offer on 100 to 200 deals a month, right? Whether it's like a formal offer or not, and we end up buying about one a month. And so we're doing our full due diligence. We're so active on the market. And so when it comes time to us actually buying a property, we know it's the right property for us to buy. Because we're so conservative in how we look at deals and the amount of deals that we weed through to get to the one that we're going to buy. So when an investor comes like, wait, so why is this a good deal? Like we're so happy to run through that and create that trust and explain, well, this is how we look at it. This is why we're so adamant about buying it. And this is why we're not only asking you to invest in the deal, we're investing in the deal.
Right. It's always good to get the questions out of the way. Because like you said, that the investor is actually serious, right? And that they're actually looking into it. And the more transparency that we can give to the investors, the more credibility we build, and the higher the likelihood that they're going to want to invest with us, not just on that particular deal, but also for future deals. And that's really what it's about. I mean, I don't know what the statistic is about a repeat customer versus getting new ones, but clearly, if you can keep people happy and make them money, they're very likely going to come back and they're going to tell their friends and family, hey, I'm making money with this group. I think you should meet them, and they're good guys to talk to.
Yeah. I mean, look, there's so many operators, there's so many people buying, selling, transacting in real estate. And for us, like we're just looking to partner with the right people, and we want to be a source of not just, for an investor to come and bring their money to us, because we've directed investors to other operators or other investments, right? Because it's a better fit for them. And so we're happy to have that relationship, and I think that's our goal in doing what we do is, provide a service for people to grow their net worth, but also help steer them in the right direction for whatever their goals are.
Yeah, if someone comes to us and says, hey, I have $250,000 and that's all I have and I want to give it all to you, we're not going to take it. We're going to tell them, hey, look, we'll take 150, maybe we'll take 200 or something, but you got to keep your reserves, and you should also diversify, right? And even if you're gonna put it with us, don't put it all into one deal, right? Like put 75 into one deal and 50 into the other and 100, and so kind of spread the money around, so that you're not, so that you're diversified and that you spread the risk around.
Exactly. So that's all I have talking about investors for now.
I could keep going, but Maxx.
I'll go get dinner.
Exactly. Exactly. But thank you guys for tuning in. We appreciate it. If anyone has any questions about investing or just questions at large about the Goldfinger Group, we'd be more than happy to hear from you. We'll see you again in 2 weeks.